morning, everybody. Welcome to another day of Market Report brought to you by Mike Bjork. Today is Tuesday, September 17th, and we got a couple important economic news releases scheduled for today. And we'll start off with the inflationary news, which is the CPI, or the Consumer Price Index, for the month of August. So back in June, we had a 0.2% increase in the inflationary levels, and the forecast was supposed to be for August a little bit more mild at 1.1% growth, and it came in at forecast. So once you strip out food and energy, which creates the volatility in the CPI report, we have the core CPI, and this is primarily the numbers that the Fed watches. We had, again, same thing as the headline. We had a 0.2% growth in the month of July, and the forecast was 0.1, and it came in at exactly the same. So hit the forecast. Inflation still showing, unfortunately, still very low levels. We do have to kind of watch that, so that way we don't kind of go on a deflationary level. It is something to be concerned about, watch, especially with all the Fed stimulus programs that have been going on. It's been spending that usually creates inflationary numbers. Last but not least, we got the Home Builders Index for the month of September. This is their confidence level that home builders are seeing out there. So we had a 58 back in August, and forecast was supposed to improve a little bit to 59 and stayed the same. So there's no change in the home builders' feelings or their confidence level of where the economy is moving. And then we got the headline news, and currently the stock market's up. And today begins the FOMC. This is the two-day meeting that the Fed has when they can join together. And this is tomorrow we'll have the big announcement. So everybody's been waiting for months, since there's been leading up to this point where they've been talking about tapering. And the target date was September. So they do have a feeling. There's a lot of feelings as to it, but they're kind of, the consensus is that the Fed is kind of forced to make a tapering moment since it's kind of expecting it. There's been talk that they think it could be as much as 10 to 15 billion reduction in how much they purchase. There's some people think, well, maybe because the economic news since the last meeting hasn't been that great, maybe it might be more modest, like at $5 billion. But we'll have to wait and see until tomorrow. But the biggest thing is not supposed to be the initial tapering. It's the program that's going to be rolled out on how they're going to proceed. Is it going to be for a while, these small increments, or are they going to just pull the chain, so to speak, yank the chain? So it's going to be kind of how they lay it out and how they kind of communicate this out. Now, yesterday the market came up pretty high. Stock market and the bond market saw really nicely because, as we mentioned, Larry Summers had resigned from withdrew his name from the nomination for Fed president. This was because a lot of people felt that he's been a big critic of the quantitative easing here, and they thought he would yank the chain much quicker than the course we've been going at. And he's also been led to believe that he's not the most diplomatic person to deal with, so he would be kind of difficult and kind of roil the markets a bit. So this was actually on a global level. A lot of people globally are watching this moment for tomorrow as they're concerned about the Fed tapering. Now, this puts Janet Yellen, the Fed president in San Francisco, now the front runner for this. But it's not a shoo-in, as Obama has been believed to be annoyed that there's been a lot of public cry for her to become the next Fed president. She's believed to be more of a dovish person and kind of keep the chain as to what Bernanke said in terms of the Fed purchase program. And she would probably keep the course and probably keep it probably more conservative to make sure that the economy is more in tune, more in growth mode before she would pull it away a little bit. That's the type of person, or at least the background that we would expect from her. So let's go ahead and take a look at where the bond market is. And yesterday we reduced quite a bit. I remember we had about 85 basis points improvement and had a nice improvement. So we lost some of that, about 60 some basis points. And right now we're about the same. So we started off a little higher, about 25 basis points higher, and then we reduced it. We pulled back a bit so far this morning. But I would expect that primarily because the leading up to this tomorrow. So a lot of people probably going to be pulling money out in anticipation of see what the Fed announcement will be. and decipher it, and then probably go from there with their investments. So I would say probably by either Wednesday, or I'm sorry, probably closer to Thursday, see some normalcy. Probably start seeing some normalcy a little bit until we got some other news that'll be coming up. And of course, the president's selection for the Fed president, and of course we still got Syria in the back burner here, and everything else. So, but right now we're about the same where we left off yesterday in terms of interest rates. All right, folks. Hopefully that information was helpful. We'll see you guys tomorrow. Stay tuned. Tomorrow will be the big day that we've been waiting for months. And thanks for watching. Have a good day.